Thank you. Good afternoon. Every year, merchants lose an estimated $10 to $20 billion to e-commerce payment fraud. Our goal is to help merchants cut these losses in half. Curaxian Analytics is a software service that analyzes payments data to produce fraud rules that stop more fraud, protect good orders, and cut the cost of doing manual review. We do a great job of finding fraud, but what really sets us apart is our ability to reduce the cost of managing fraud. Let me give you an example. Suppose you have a strategy that allows you to keep fraud under control, but for each dollar in fraud that you reduce, you have to either turn away or manually review $40 in good orders. What if there was another strategy that could give you the same overall protection, but instead of rejecting or reviewing $40 worth of good orders for each dollar in fraud, you could review or reject only 5 cents in each dollar of fraud that you eliminate? This is what we do, and now we're going to show you how. You can see on the screen that our fraud rate for this merchant is 2.3%. Let's cut this in half. Our next screen shows one of the ways that we can break down fraud data to help merchants better understand their business. In this case, the data is showing that fraud is highest in the United States. There's just one problem. It's probably not true, because cross-border fraud is usually a lot higher than domestic fraud. Let's dig deeper and see what we can learn about these orders. This data shows that when an order is associated with a proxy, which means that it's probably a foreign user masquerading as a local customer, the fraud rate is as high as 43%. Now, if you were a merchant looking at this data, you wouldn't want to build a rule that rejects orders that come from proxies, because even though those orders have a 40% fraud rate, 60% of those orders are still good. So let's take a look at another variable. This merchant gets a lot of traffic from affiliates. In this example, we counted the number of times that a user tried and failed to make a purchase because their card was declined. We associated that decline history with each affiliate, and then we measured the fraud rate associated with the decline history for a given affiliate. This data is showing that if we saw more than 5 declined charge attempts for a given affiliate, the odds of the order being fraud were above 19%. I've included this example to make an important point, and that is that building great fraud rules is not just about crunching data. In fact, what you measure and how you measure it is as important as the way you do the analysis. Let's jump to our solver tool, and I'll show you how we use this data to build better fraud rules. The data on this screen is showing that if we built a fraud rule that rejected orders that came from an IP country in the US and from affiliate number 1, that we would reduce fraud for this merchant by 6.43%. Now, our goal is to achieve a 50% reduction. To do that, we would need to build 4 rules that correspond with the first 4 rows of this report. If we did that, we would reduce fraud by more than 50%, but that decision would have a marginal cost of $88 million. In other words, for each dollar in fraud that we cut with this strategy, we're also turning away or paying someone to review $40 worth of perfectly valid orders. This is not very appealing, is it? Let's look at a better solution. Here, we combined IP country, affiliate data, IP proxy data, and decline history. In this example, we can achieve a 59% fraud reduction at a marginal cost of 4 cents per dollar in fraud reduced. In other words, with this solution, we can cut fraud in half, and we only have to reject or review $52,000 worth of good orders. Take a moment and compare that to what I showed you in the prior solution, where the same exact fraud reduction would have required rejection or review of $88 million worth of good transactions. This, in a nutshell, is our value proposition. Finding fraud is relatively easy. Stopping fraud without also stopping orders from good customers is a lot harder. We've solved this problem by taking apart the process a statistician would follow to build great fraud rules, and we built a web-based application that does the same work. Building and refining fraud rules is a continuous process for merchants because criminal behavior is always changing. We make it easy to update fraud rules, and we give merchants the power to do it themselves instead of relying on a third party. Curaxian Analytics is a reporting, analytics, and monitoring system for payments. I've only scratched the surface on what we can do. For example, we also help merchants manage authorization declines and interchange qualification. Our platform is integrated with one of the top acquirers in the United States, and our customers include 2 Fortune 100 merchants. If you're a payment processor, we'd like to partner with you to offer Curaxian Analytics to your merchants. And if managing fraud is a priority for you, please let us show you how we can help. Thank you.